All right, Mark here. Thank you for joining me for another Greenbridge Investing market analysis. Today is Wednesday. We're going to be going over Bitcoin, the major markets, and select stocks. I'm hoping you have some tickers or some symbols that you'd like to see, but if not, I have my own, so don't worry. I'd like to thank you for joining me for this live session. If you have questions, please feel free to ask while I'm going through the material. Also, if you're new to Greenbridge Investing, please make sure you visit our website at greenbridgeinvesting.com. We have a couple of chat rooms there. We have a free one. We have an active investor chat room, which is subscription based. And that's where we share our trade signals, our portfolio ideas, and our analysis each day, okay, to provide perspective and also just a general idea of what's going on in all the different markets that we follow. All right, so for those that are watching, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, let's begin with Bitcoin. Again, if you have questions along the way, please feel free to ask. And also, make sure if you're new to the Greenbridge channel here, make sure you subscribe to the channel and that you like the channel so that every time I do one of these, you get an email notification from YouTube. All right, now let's begin with Bitcoin. We had our swing trade idea that was actually, we sent out the idea back here. It didn't trigger until here, all right, which took like, what, a week and a half? And there were a number of buy and sell signals along the way, right? This most recent pin bar was the more recent buy signal, but we don't put our buy stop just above that pin bar. This buy stop was like in the low 96 area because we wanted Bitcoin to work to get to that. Now, as you can see, it's giving us some trouble here, right? But this is nothing to react to. Right away, I see in the chat room, I see people asking questions. It seems as though they are concerned about the market being at a top and this and that, but it's too early to make such a judgment, okay? It doesn't matter what kind of technical pattern is out there. We have to look at the bigger picture. And that's the whole point of why I do these analysis sessions anyway, because I want people to not have to react and to focus on the variables that will keep you more in tune with what the market intent is. Now, so with Bitcoin here, is this a sell signal that we have here, this little inside bar? Well, in theory, yes. Okay, cool, Tonio. Oh, by the way, if you have any symbols, like Tonio put their OTLK, if you have any symbols, stock symbols, or markets you'd like to see, share them in the channel now. So once I get through mine, I can jump right into yours. Thanks for sharing that. All right, so do we have a sell signal here? In theory, yes, but you have to look at the broader structure, okay? Like I've been talking about, we're in a range on Bitcoin. The low of the range is basically this 8,500 area. The high of the range is this low 10,000 area. We're in the middle of the range. This price action is pretty much random. That's why for those that read the trade idea that we sent out, and I've talked about it numerous times, I said, buying in the middle of the range, which is pretty much where we bought, it's not a great place to put on a position because of the randomness, but the broader structure is bullish. So we're willing to take our chances. We compensated for this 50% area or middle of the range by putting on a smaller position. So if we're wrong, we get stopped out, we lose 1%. Remember, our average or our conservative or position size that we usually take when we're very confident with something, or it's a great location, very good high probability, great reward risk. Our max risk is 3%. Okay, so when we're putting on these 1% risk positions, we're doing that because we recognize that there's elevated risk, and we want to compensate for that. That's a very important thing that people need to understand. And when we send out those trade signals, we don't just put 1% just because we feel like it. Okay, so anyway, so Bitcoin, there's really not much to do with this here. We have our stop in place, and we have to let the market determine the outcome. That's the best we can do. Now, if you don't like this situation and you're like, well, I don't like the sell signal and I don't want to take that full risk, you can get out earlier. And if it generates a new buy signal, you just have to be prepared to get back in. Now, that can cause friction because you may have to get in and out a few times, but this, it all really sums up to how much risk you're willing to take. All right, we have our stop like in that 8,900 area, whatever, wherever it is, 88, whatever it is. I don't remember the exact number. Someone shared it in my other video, but that's where our stop is. Okay, all right, so that's Bitcoin, and we'll see what happens with that. Again, there's no reason to react or overreact. This is nothing. This is just noise. That's all it is. If you're a day trader, sure, that's a little bit more going on there. You can do something with that, but we're not talking about day trades. It's very important to understand the difference. All right, let's take a look at the NASDAQ. So again, people are worried about the NASDAQ. In the chat room yesterday, before this move, I put a thing in the chat room near the close of the day, and I said, don't get, at these levels, at these highs, when you see a market pushing high after high after high, it's best to be more cautious, not more aggressive or complacent or feel safe. I specifically put that in there because a turn can come out of nowhere. What do we have today? Out of nowhere, it just, selling came in, okay? But now here's the thing. So people are right away, they're jumping and they're saying, is this a double top? Should we be getting short? What do we need to confirm? This and that, whatever. This is still too early to judge as a double top. Now, it could be a failed high because it's barely higher than this high back here, right? 10,158, and this high here is 10,309. Relative to this time frame, that's not a big difference, right? So that's possible that we have a failed high situation. Now, we took out yesterday's low, which is also another important piece of information. Getting short in this situation, like, buying puts or selling calls, which is like what we typically like to do in instruments like the IWM or, maybe the QQQ. The thing is, it's very aggressive. And the reason why we say that is because this thing has not taken out any major supports at all, right? The first minor support you're looking at here is 98.55, right? That's this low over here. That's your minor support, right? You're not, until you start taking out supports, your next one is like this low over here, 93.83. This thing may find a higher low somewhere between here and there. So everyone's all in a hurry to get short. Meanwhile, this thing is not exactly in bearish, showing us a bearish configuration. People right away like to assume that this is a trend reversal. This is just a failed high. It's not the same as a trend reversal. That's a very important concept. So to get a trend reversal, we need confirmation, and confirmation takes time. We need to take out lows, okay? At least, if anything, we need to take out this low to get a sense that, we have bearish momentum in play, at least. The trend, all right, is even broader, right? And this, I have to update this number here, which is this 8,000. What is this? This low here is, 85.70. It's probably higher. It's probably around 9,000. But it needs to take that out before we could say that this thing is changing its trend, okay? And most likely going into a consolidation, not necessarily a bearish trend. It's very important that you have those concepts organized. Now, as a day trader, sure, this is a bearish trend. As a day trader, we're not day trading. So that bigger picture, in order for this bigger picture to turn, those levels have to be taken out. And until then, it's very possible that we get a higher low somewhere along the way. And if we get that, we want to be long. We want to be buying our stocks at good prices and rotating our profits like we've been doing over and over throughout this entire rally. So it's still too early. So my point is about the NASDAQ. It's too early to call this a trend reversal. It's too early to be overly bearish. Cautious, yes, but we want to see the pullback. We want to see where our buying opportunities are. And our first inflection point, basically we're looking at this, this low over here, right? 98.55 and in that 9,300 area. Those are our inflection points. Besides, pushing lower. We want to see how the price reacts in those areas for possible buying opportunities. We've been taking our profits the entire way up here, and that's an important point, and why we always emphasize take your profits, let the targets get taken out. Now, anything that we are in, we only have 1/3 the risk on, in a lot of the trades that we're in, because we've been taking our profits along the way. And now we can sit back and see how this thing plays out instead of being worried about every tick. Okay, so I know I speak really long about these things, but it's just very important to me that people are clear in terms of perspective and not to overreact. If you turn on any news station, if you go to Twitter or you're just going to get all kinds of overreactive hype. And the reason why they push that, it's not, you have to understand something about news and about that type of content. It's not there for your best interest. It's there so that they can pay their bills. I mean, they're looking for attention. You go and watch, and then they can justify higher ad rates. If there's some guru out there putting out a lot of stuff, he wants your attention so that you go to his website and perhaps buy something. That's it. Okay, that's fine for entertainment purposes. That's cool. You want to have a general idea what's going on, but it's not effective when you're trying to time markets with your money. Just want to make sure that everyone's clear on that. I don't say that to pick on these people. I'm just saying, they're running a business like everyone else, and you need to understand that. So that's the NASDAQ 100, which represents the entire stock market. Again, not a whole lot to be worried about here. Just normal, healthy pullback, okay, which we've been kind of due for. Now, let's take a look at gold. All right, now gold, this thing reached, look at this, okay? So this thing went to our second target, was it yesterday? 1765, and it went slightly higher. We went to 1779. Nice. Our third target you could see is at 1815, and we have this bearish pin bar. And like I said to our members, I said, listen, we're out of this thing 2/3 of our position, okay? So we only have 1/3. And if this thing can follow through, then hey, we just watch this thing go to the third target and we just sit back and enjoy. But if you're buying on the breakout, which is what a lot of people do, okay, we bought at 1703. But what a lot of investors or traders who don't, they're inexperienced or they're just doing the obvious. They buy the breakout. Now they've taken an enormous risk. If this thing fails or doesn't follow through and they get caught in a fake out, this is where you worry. Now it's a bearish pin bar. That's ugly. I would hate to be long from these prices and be like, man, now I have to hope it doesn't pull all the way back and stop me out. This thing can pull all the way back into the middle of the range, which is like 1700 again. So gold is a real pain that way. As you can saw back here, right? I talk about this trade all the time. We missed this trade, but it gave us a new opportunity to buy, and this is where we bought it. It pulled all the way back to the low of the range. What if gold only pulls back 1 or 2 candles and then breaks out? I mean, that can happen. The point is, we only have 1/3 the risk. So we can sit back and we don't have to stress. While people who just bought, either they're getting out of it now, maybe some people are even shorting this thing, which is not a great idea unless you're day trading. And that's it. So nothing to do here, but let this thing do its thing. The ideal situation is we pull back to this high, this old high back here, maybe 1740 area, something like that, and perhaps we get a new buy signal. That would be nice. Maybe we'd even send out an alternate trade idea on top of the one that we're in, possibly. And that's it. So gold is still in good shape, even with the bearish pin bar. Yes, this could be a fake out, just like the S&P and NASDAQ, but it may also not be. This could just be a little reaction, and next thing you know, tomorrow's candle takes out the high. We don't know. But we can't make predictions just on this alone. Okay? The ideal situation is we pull back to a support, and we get a new long signal. And that's it. Since we only have 1/3 the position on, we don't have a whole lot to worry about. We've locked in 2 profits along the way. And that's how you generate consistent returns. All right? We've been in this trade since this candle here, which is what, June 7th? Right? That's a lot of time to be in the trade. So, okay, so that's gold. Now, let's take a look at what else do I have on the radar here? I have the New Zealand, okay, New Zealand against the dollar. New Zealand dollar against the dollar, USD. Now, this thing here, we had a long in this, all right, and it got stopped out. Now, this thing coincides with the stock market, okay, and we sent out a long on this the other day on this break here, and it didn't go very far. It turned, and it's okay. You know, stop outs are part of the game. You have to be okay with them. They save you money. We had a recent situation in the British pound where we sent out the idea. It was at 26.15 or 26.05. I think it was 26.05. And the stop was at 24.45. It went to the stop. Okay, it actually went 150 points lower than the stop. And, you know, how lousy would it have been to bang it out at 123.20, and then it went back to 125. Okay, so we didn't get back into that yet. The point is, stops save you money, and they're very important, especially in Forex. So we got stopped out, no problem. What do we do now? Is this thing bearish? Well, no. This whole structure here, that whole structure is bullish. Okay, I'm going to just highlight that structure. It's very important to not lose sight of this. Okay, that price action inside of that rectangle is basically a range-bound situation. The ideal formation we can get from something like this is a failed low, meaning we take out this low over here of 63.82. We take out that low and we reverse. Why would we be so bullish on something like this when you can argue that there's double top, lower high, all kinds of bearish stuff? I mean, why should we still be bullish on this? Can anyone tell me? Here's the interactive portion. Again, feel free to ask me questions. You know, maybe people are shy today, but feel free to ask me questions while I'm going through this. And you know, I'm almost done, and then I'm going to go over the stocks. I have one stock here, OTLK, but please feel free. But my question to you right now is, why should we still be bullish on the New Zealand dollar? Why? I just finished talking about, you know, all this bearish stuff going on, the lower high, blah, blah, blah. Why should we still be bullish? Can anyone tell me? This is an important lesson because this applies to many markets, right? And this, we may see the NASDAQ unfold in this way as well. And many people are going to get very bearish. Meanwhile, they're going to get caught inside of a consolidation. So can anyone tell me? I'm going to give you 5 more seconds to tell me. Why? Why should we still be bullish on the New Zealand dollar when it's giving us this type of price action? Okay, so here's the answer. The answer is, okay, Ricky, hold on. Potential consolidation. Haven't taken out previous low. Okay, good answer, Ricky. Good answer. That's relative to what I was going to say, and that is the broader structure is bullish. Okay, this is the structure that's in play. All right, we can even go back further, and we can say that, look, from this low, this is the structure that's in play. That's a bullish structure. That's nothing but higher lows and higher highs. So like Ricky said there, potential consolidation, that consolidation is in a position to be a higher low. So the lows of this consolidation are going to be the most valuable, the highest probability areas to take a trade. And that's, you know, what I'd love to see if we can get some sort of reversal pattern at such a location. So that's where the trade idea begins, at a location. But that location has to have context. Okay, and that's the context, this broader structure. So we'll see if we get that, and if we do, that would be a new place to take a new swing trade long idea. Of course, we would send that information out through text and email. Perhaps on the next leg higher, maybe we'll do the pound or the euro. I tend to like those pairs better, okay, than the New Zealand dollar. But we'll see what that is. So speaking of that, let's jump over to the euro real quick, because, you know, the euro's in a similar situation. Now look at this thing. So the euro tried to jump along with all these dollar cross pairs, right? Because of whatever nonsense in the dollar. I don't pay attention to the fundamentals because I'm only interested in short-term momentum, and they don't really help when it comes to timing. So look, this again could be faking people out. We're not in this euro position, but just like that New Zealand dollar, I mean, New Zealand had a consolidation. This thing has a much clear-cut higher low. It's very possible we get another little mini higher low. Right now we have this bearish inside bar, which may lure some people to go short, but it's not a short, not yet. The reason, just like New Zealand dollar, is this is the structure that's in play, okay? So relative to that structure, this is a higher low. That's strength. Higher lows typically lead to higher highs. So even if this thing fools around, the ideal situation is give us a failed low, okay? 1168, so maybe this thing goes to 1150. Or something, and then reverses. Maybe it gives us a little mini higher low. Those would be ideal locations for such a reversal. It would allow us to measure our reward risk in a reasonable way, and that's where a long idea can come from. So, you know, today is Wednesday. Maybe we'll see something, maybe tomorrow. Going into Friday, though, we like to avoid Forex because anything can happen between Friday and Sunday night. So these may be candidates for early next week. We'll revisit this stuff again on Friday when I do my video. Okay, so now that's pretty much where we were there. I like to check out Roku because that's the one stock that, I've been really on top of. And as you can see, right, after going to our second target, this thing turned along with the market, right? But we're out of 2/3 of the position. So, and I said on this pin bar, right, for those that watched that video, I said in this pin bar, if you don't like the idea that this thing can pull back, take all your money off the table. I said, use your discretion, close the position, right? That's up to you. We're just going to let it run because, again, we don't have a whole lot to worry about. We're only in 1/3 of the position. And, this thing pulled back to 120. This thing was as high as 134, only 2 points away from our third target. But here's our rationale. If this thing goes back to 109.5, which is where we bought it, and we close it out there, okay, the trade is still green because we locked in 2/3 of it for a profit and broke even on the third portion, right? If we do something like that. So why not just give it a chance, right? And if the next leg up fails, then we'll probably send something out as far as, okay, here's your official exit. But you have to be able to use your discretion in those situations to avoid these situations. Maybe this is uncomfortable. You're like, man, I could have had it at 135 or at 130 or something, and now I got to take this pain. Maybe you don't like this, okay? And that's what you have to, I want you to have the confidence to be able to use your discretion in such a situation and be like, you know what, I'm getting out. I don't like it anymore. And be confident with that decision, whether it goes higher or lower, right? That's the key, is confidence. Okay, so that's Roku real quick. Now, let's get into OTLK. What do we have here? OTLK. Again, if you have any other tickers you'd like to see, please share them with me. Now, Outlook. Okay, so this is one of those biotech, pharma, whatever stocks that have been, they're wild in this environment. That's cool. It's inexpensive, which is nice, right? I like these cheaper stocks. Now, as far as structure goes, again, I'm not very familiar with this, so let's look back a little bit and see where this thing's coming from. I mean, obviously you had some wild movement. Look at that movement going back a year, right? Pretty wild, going from what, $7 to like $3 in a matter of a few candles. Okay, that was a while ago. Now, since then, it found a bottom. Okay, at the beginning of the year, it found a bottom at 60 cents. Oh man, that was a tough hold. That's the kind of situation, like if you're in that from higher prices, you just have to let it go to zero. There's no point in banging it out at 60 cents. There's just no point, right? Now, it found a double bottom at 50 cents. All right, obviously this low must have been lower. 54 cents, 53 cents. Sure, Ricky, no problem. So double bottom there, and since then it's developed some bullish structure. So, obviously this stock doesn't have a lot going for it just based on that broader chart. So as an investment, I don't know, it's tough to say, especially since I'm not familiar with the story on this thing. But as far as recent structure though, and momentum, can this thing push back to like $3 or something? It can do it. I mean, $2.50, it can do it. You do have a nice higher low in place. Okay, at 103, so that's basically your $1 area, and I think that's the whole number that I would use as a sign of strength or weakness. As long as you're holding above that $1, and maybe you get closer to it and you get some sort of reversal, then perhaps it's a long, and you try to make a couple of dollars on it. But again, remember these things are highly speculative, and a lot of times when these cheap stocks, you can have a lot of day traders in these, a lot of day traders, and they can make things very erratic. So you can't really read too much into the candles on these type of stocks because they're going to be erratic. All right, so you have to look more at the levels. So I would use that $1 as a reference point. I mean, if you develop a higher low above that $1, making that higher high should be within reason. I mean, so pushing to like, above 150, maybe closer to that $2 level is within reason, over the next couple of weeks. So definitely something to keep an eye on. If you have some, just hold on to it. And I don't know where you own it from. If you don't have some, well, I mean, this is a kind of stock you take a small bite with, and if it starts going your way, you buy some more. Maybe you start out with 100 shares, and then it breaks out, you buy another 100 shares. But you can't be overly technical with these because they're too random. Okay, because of all those situations going on, like, too many day traders and stuff like that. They could make it very erratic. So just something to keep in mind. Also, you have to be willing, like if there's some negative news and this thing gaps back to 50 cents, you have to be okay with that type of risk as well, because it can just come out of nowhere, right? That's the nature of this type of stock. So thank you for sharing that one, Tonio. All right, let's, Nicholas, oh wait, no, I'm sorry, Ricky. We got Uber. Let's take a look at Uber. Thank you for sharing, Ricky. Let's take a look here. So now remember, we have a negative day in the NASDAQ, and many of these stocks are going to show negative candles because they're going to be sensitive. So here's Uber. It had this nice run. It's been pulling back. You have this lower high right here, all right, at this 33.50 area. That is a reason for some concern. I don't know where you're in from, but here's the other thing you have to keep in mind. Everyone's going to be focused on the bearish aspect. But just like many stocks and many other things that we looked at, you cannot ignore this bullish structure because that is what is in play. So maybe we get a failed low situation right here. It's at a great location for such a scenario. The problem is we have no setup. We just have this big, ugly red candle. So can't do anything at this moment. If you're looking to buy something like this, it's best to wait for some buyers to step in first, and that can be in the form of a pin bar. That could be an inside bar developing tomorrow, maybe the next day, right? And ideally take out the high of that bar. But if you have that double bottom formation in place and confirmed at that time, that's a good sign, because the next step is you should be taking out this high, which is 34.16. I mean, that's what in theory, that's what it should do when you have a failed low at such a location. Now, if this thing keeps going, if the market has a broad pullback, keep in mind, this thing has a lot of room to pull back as well. So you have to, respect your stop. The next level on this thing, as far as support and resistance, you're looking at is like this 28.5 area, okay, which is this old resistance. That's a likely area to find support. So if it clears that, I would just step aside on these things and wait until more stability comes back into the market. But in general, I like the location. It just needs a setup, okay, to go long. So good question, Ricky. Thanks for asking. Nicholas, could you take a look at Nano BTC? Okay, sure. Let's see. So Nano. Now that's obviously an altcoin. And let me see. Do I have that here? Maybe I have to click on this thing. BTC. Let me see. Is that the ticker Nano? Is it Nano BTC? Is that the specific ticker? Because I'm not familiar with that one. Let's see. Nano. Okay, here it is. Nano BTC. Okay, interesting. So here's Nano. Wow, what price is this thing? Yeah, this is one of those. Okay, it's like fractions of a penny. Okay, nice price structure though. So let's go back and let's take a look what we have here. So obviously there's a bottom around this price. You have to see the failed low over here. Nice failed low. Look at that. At this price, which I can't even read. 0.00000 like 648 or 680 or whatever that is. Okay, so since then you have this nice push off of there, and you have nice Elliott wave structure. I mean, look, you're going to get these type of structures no matter how small the price is. You have a higher low, you have these nice higher highs, and these situations, again, just like that OT LK, when they're really inexpensive like this, you're going to get a lot of noise. Okay, so you have to avoid a lot of these wicks and these tails because they're not going to be very helpful in these situations. And you have to look at the broader structures, like the higher lows and the higher highs. That would be much more helpful. When you're in a more expensive stock, if you're in like an index, then the price action tends to be more orderly. But in these really, really inexpensive ones, it can be very, there's a lot, like I said, there's a lot of noise. So as far as strength or, strong or weak, well, I would say you have some structure of strength here in recent weeks, right? You have this attempt where it's trying to pull back. You have this old resistance here at, I'm just going to say 1069. I'm just not going to say all those zeros, which should act as a new support. Okay. Obviously, this is relative to Bitcoin. So here's the thing with these. I'm not too crazy about these because, for one, they're against Bitcoin, right? So in theory, if Bitcoin goes higher, in theory, this thing should go lower, right? And if Bitcoin goes lower, in theory, this thing should go higher, but that doesn't seem to be going on here, right? So since it's in terms of Bitcoin, again, you just have to just look at, this chart structure on its own. So I would say, you're looking to buy the pullback. That pullback would be around that 1068 area, okay? That 1060 area, and then wait at least for a green candle. I mean, forget about the type of candle, just some sort of green candle or something. That's all you could do with this structure. If it takes out this low here of 0.938, if it takes out this low, then it's step aside time, because that means this bullish structure is no longer in play, okay? I mean, just based on these structures that it's developed, that's how I would go about it. Between here and there, I mean, you can get your higher low anywhere between here and there, and this thing may even go into a range a bit before breaking out. Now, I don't know what the story is with this coin. I don't know what their premise is or anything like that. And obviously, it's not following Bitcoin exactly. So yeah, that's why you can't get confused by that stuff. Just go by the chart. Okay, so I hope that gave you some perspective there. If anything, I mean, the structure is bullish. So that's the right off the bat. At least we know that. All right, so thanks for sharing, Nano. DLTR. Okay, let's take a look. I'm not familiar. Let's see, is that dollar? I think that's Dollar Tree, right? DLTR. Is that Dollar Tree? Let me see here. Hold on. Stock. Yeah, I thought so. Okay. Let's take a look. Okay. Oh, so yeah. Okay, Ricky. So with Uber, right? Okay. So oil, sure, no problem. We'll take a look at oil. Sure, we could take a look at the Nifty as well. Okay, no, I didn't go over oil. No, I'm glad you brought it up because, I haven't been going over oil because it's like the same story, but if people ask for it, no problem. So here's Dollar Tree, okay? Now, look, Dollar Tree's had an interesting move. Look at this move right here. I mean, this gap is likely earnings. I don't know because I don't follow this stock very closely. But the point is, you have this strong gap, okay? And since that gap, it filled the gap, and now you have this higher low situation developing, followed by today's pin bar. This is a good sign in the face of a generally weak market. So I like this as far as a long. Look at this. I mean, you have this old resistance right here, which is now a great reference point for a new support. It didn't even touch it. Let's see, what is this? 85.54 is the low of this candle here. And it didn't even touch this high, which is 82.80. So you figure between 83 and 85 is your support, okay? Now, I don't know if you're in something like this. If you're in it, there's nothing to do but let this thing do its thing. If you're not in it, I mean, this is a buying opportunity, right? The pin bar, it's a higher low. You want to take out the high of that pin bar, which is 90. So you figure you give it 90.25, maybe 90.5, and you clear this consolidation, right? It is reasonable for this thing to test the $100 area. In theory, it should take out $100 because higher lows typically lead to higher highs, right? So I like the setup. I like the location. The only concern that I have is the general market because it's too early to tell if the market is in a real pullback or not. If it's not, I mean, this thing should be in good shape, okay? And this would be a good candidate for a bearish fake out, meaning the market gets everyone bearish and then it fakes out and then everything goes higher, right? This would be a good candidate for such a scenario. So I like Dollar Tree, definitely strong, great setup, great situation, great location. Thanks for bringing that one up. We can put that one on our radar. I'm not sure, I don't remember Andrew talking much about Dollar Tree. So thanks for bringing that one up again. Where did you, Kemp, where did you hear about that one? I'm just curious. Was that one like you picked up on the news or something, or I'm those sometimes when I see these tickers that I'm not familiar with, and I know that Andrew hasn't really been talking about, I'm just curious where you picked them up from. Okay, so that's Dollar Tree. Now, so oil. All right, let's take a look at oil. Now, oil. So oil has been, we've been staying away from it because it hasn't really been giving us any clear signals. Okay, and there's so many other markets that have been giving us signals. It's like we're just going to go where the opportunity is. So let's take a look at first WTI USD, which is Owanda. Now, Owanda, I don't know what their problem is, but for some reason they have their own charts, right? And I guess I don't know how they calculate what they use to calculate their oil prices. Because I had a question about natural gas recently as well, and it was funny because Owanda was also the other chart that looked strange. But so I'm going to go over both charts. This is the Owanda chart. Now, is this a coincidence? Does this not look familiar to you? Right? This is not surprising that we're getting a pullback in the NASDAQ and oil happens to be bearish. This is I think this is a nice lead as far as what the broad stock market does because it's following this thing, all right? That relationship stays intact until it's no longer intact. So there is this, you have this bearish candle. It's not exactly a pin bar, but it serves the same purpose, okay? You have this sell signal in oil. Can't do anything with this right now because what? First of all, the broader structure in this thing, is it bullish or bearish? I mean, this is the broader structure, okay? Just like the NASDAQ, just like Bitcoin, just like many of the other stocks we looked at, that is bullish. So we can't get overly excited. Okay, cool, Kemp. Thanks for letting me know. We can't get overly excited on the bear side because what if it's a fake out like this one over here? So we'd be looking for longs on oil. Just no reason at the moment. We're not going to buy this bearish candle. We need to see a reversal. The other thing is we need to see a level. Now we have this old resistance back here at 36, right around that area, which it's fooling around with right now, but there's no setup. So we can't do anything with this, okay? Just have to let it figure itself out. Now, over the next couple of days, perhaps maybe even Sunday evening or Monday, we get a bullish pin bar or something. Oil may be a good candidate for a swing trade long, okay? Now, so that's the Owanda chart. I'm liking it as a long, right? Just looking to buy the pullback, just not yet. Let's take a look at the other version, the more normal version, which is USD WTI, I believe. Okay, this is what most people see from their Forex brokers. Like I think, Forex.com shows this chart. And the chart looks slightly different. This chart shows a double top, a clear-cut double top. I mean, a failed high, okay? And you have this bearish situation, just like the other chart, and it's pulling back. Now, just like the NASDAQ, like I said, it's too early to judge this. We can't call this a trend reversal. We just can't call it that just yet because there's so many opportunities for this thing to reverse and give us a higher low. And a lot of people make that mistake. They jump in and they think it's a trend reversal. And they start shorting it, and then they form an opinion that it's bearish and all this and all that. And meanwhile, it finds a support, fakes out, and makes a higher high, right? So no opinions. This, timing has very little to do with opinions. We're just looking for evidence, and then we're looking to make adjustments based on that evidence, whether it's a new position, adjusting a position, exiting a position. That's what I mean by adjustment, or planning a position. So like with the other oil chart, there's really nothing to do here. Let it pull back, let it find a support. If we like the location and it gives us a buy signal, we're willing to give it a try. Okay, if this is truly a trend reversal, then that new buy signal that we're looking for will most likely stop out, or it'll turn red pretty quick, right? Maybe we can get out of it early or something, and then it should start taking out support levels. Then we'll have a better idea that the trend has changed. But until then, we can't make that judgment. So looking for longs in oil, okay? That's all I'd say with that. Just need a location, need a setup. So thanks for that. All right, so that's oil. Let's take a look at the Nifty, which is the Indian exchange. I guess it's the equivalent to the Indian S&P. Okay, the 50 index here. Let's take a look at that. And these global indices, just like the DAX. You know, I used to bring up the DAX all the time, but and I kind of got the impression that, you know, no one really cared. So I figured, hey, you know what? If you want to see the DAX, let me know, and I'll show it. So same with the Nifty, right? These global indices, they tend to follow the U.S. stock market. I'm not just saying that because I'm located in the U.S. It's just something that I've been observing for a while. Now, so in this situation with this thing, we have a failed high, and we have this outside candle developing. Now, here's one thing you have to keep in mind, and the DAX was in the same configuration as well, and that is, relatively speaking, you know, the NASDAQ and the S&P are like way up here, relatively speaking, and these global indices, you know, outside the US have been relatively weak because they're nowhere near these highs, which means one thing. If the NASDAQ and S&P have a real broad pullback, these things are going to probably go faster. Your key to knowing that is taking out this low right here, which is 95.44. You take out that low, then that would for me be a confirmed trend reversal because you have a failed high in place and now you're taking out supports. Okay, unless it finds stability right away, if it takes out that low decisively and just keeps going, you have your answer, right? But in that scenario, I would imagine the NASDAQ and S&P will also be pulling back. Now, keep in mind, the NASDAQ and S&P have a lot of room to pull back and still be healthy. This thing may be over dramatic because it's relatively weak. The mistake not to make is don't judge this thing alone. Keep in mind that the S&P and NASDAQ have an effect on it, right? So as far as investments go, this would be a good time to either lighten up, take profits, or, you know, reduce risk, get out of things that haven't been performing very well, wait for a buying opportunity. Even if it takes out this low, you have to watch the S&P, okay? And if that thing turns, this thing may give you a failed low, and that would be a buying opportunity. So this structure, even though it's relatively weak to the global indices, right, the S&P, the structure in and of itself is bullish because you have higher lows and higher highs. So in theory, we should be looking for a higher low or a double bottom or a failed low for a long, in theory. But I have to mention those other indices because, like I said, they have an effect on this thing. You know, same with other global indices. Okay, so I hope that gives you some perspective there. You know, and my time horizon for these ideas, you're basically looking over like a 2-week period, 2 or 3 week period. I'm not talking 6 months out here, you know, because we can't really forecast that out, you know, based on this type of information. It's kind of unrealistic too. The more time that you try to forecast, the more randomness you invite. Okay, so good question on that. Let's see, what other questions? I can't remember. Okay, okay, cool. But that was a good, that Camp, that was a good stock, Dollar Tree. Okay, I like that one. S&P is Group A, the Nifty and other developing markets are Group B stocks. Well, Ankit, so yeah, I mean, you can classify them that way if you'd like, but it's just you have to realize that there's a leader, right? And you know, I don't make this stuff up. There's a leader, just like Bitcoin and the altcoins, right? Bitcoin is the leader. No matter how we look at it, Bitcoin leads, and that's you know, until they start finding their own way, these other ones, that's what we just have to accept. So S&P right now and the NASDAQ, I mean, they lead. They seem to be leading the world. And when they turn, these other things turn. Maybe, you know, one of these days, one of these other indices will take the lead. But until they do, you know, I can only go by the evidence that they give. Okay, and that's where I come up with my ideas, from evidence. I don't make them up. It's not from feelings. It's not from some oscillator. It's from price structure, price action, and order flow, which is the best, most accurate information that we can make these judgments on. All right, everyone. So if I don't have any other questions, these are great questions, and I really appreciate you all spending the time here with me today. I've been talking for about 45 minutes now. If you don't have any other questions, I'll look to wrap this up. If you do, please let me know before I wrap it up. Also, if you're new to Greenbridge Investing, make sure you go to our website, greenbridgeinvesting.com. We have membership there. We have a free chat room. I'd love, if you're not a member, I'd love for you to come into the free chat room and just ask questions, you know, because we like that. You know, we may not answer them in an instant, but, you know, we see some people putting questions in the room. We're happy to answer them, all right, to help to provide some insight. The trade signals and portfolio ideas, of course, that's for the active investors. So we keep that stuff in that chat room there. Plus, we send it by text and email. Also, make sure if you're not subscribed to this channel, make sure you press the subscribe button and the like button so that every time I do one of these, you get an email notification from YouTube. All right, so that's pretty much it, everyone. Thank you all again for taking the time, and I'm really happy to see the questions and the interactivity. Remember, my goal for these is to make them most valuable to you. So I want to go over markets and tickers and things, or even ideas that will help you gain more perspective and, more importantly, more confidence. Because without confidence, you really can't do much in this game. Okay, and confidence is not something you can fake when it comes to the market. All right, so thank you very much again. I'm going to wrap this up. If you have any other question, you can always ask in the chat room. We'll follow up in there. Have a great day, everyone, and I'll speak to you again soon. Thank you.